Good day traders, welcome back to this video. This is going to be the trade breakdown for Euro US dollar, and I would really suggest you guys go and watch the before video, the quarterly outlook video. And as I mentioned in that video, we will refer back to it quite a few times for the final quarter of the year. So just to give you guys the full perspective around it, the initial thoughts going into the trades, and then how the market has been playing out and the confirmations that we have received and actually taking the trades or taking the executions. So without any further ado, let's get right into it. Awesome. So on screen we can see on TradingView, after that initial July low was taken earlier the year, we've received this small impulse leg, right? And the market has responded quite well from here, right? Creating a nice dealing range. So within this dealing range, we had a nice discount array, and we executed our euro short positions in here in the form of a confirmation of a swing high being formed. All right. So there was multiple opportunities, as can see. This was the first initial opportunity, and then secondly, this was the actual euro position that we have taken. All right. So the initial thoughts was, right, the expectation is for quarter four to go bearish for Euro and bullish for Dixie, right? The 12-month candle, if we think about open, high, low, close, the market opened, put in its high on February this year, and the market created a significant low in July, which could have potentially been the low of the yearly candle. However, that was turtle soup. Order pairing took place below that lows, and we really want to see the market order pair the sell stops below the July low of Dixie, and really order pair that towards buy stops, right? So order pairing the sell stops with the buy stops. So in essence, guys, what took place here is Euro took this significant July high. The market created this small impulse leg. The market rebalanced this small tiny inefficiency in here and then sold off with this nice dealing range. Now this dealing range creates two things for me. It really highlights the fact that this market is truly now going into the sell side of the curve. I'm not selling the low risk buy right there. It could potentially play out, right? And we've seen on Dixie that it has played out buying the low risk buy. But I mean, the low risk buy and the low risk sell is not always that high probability. So in this case, that is speculation, but the market's really creating the dealing range from the low risk buy. That creates the second stage, or what many traders would see as the second leg rather. I think that's a better term to use. So what we've seen is the low risk buy or the low risk sell taking place there, creating that nice dealing range. So in theory, this should be the second leg. And I really want to explain this to you guys so that everybody understands this. The second leg is super high probability for me. That is my favorite place to trade. That is where I really want to focus and dial in on the charts and the levels, because that's where I make my money. And I've seen this many times. So you've seen it too. Low risk buy, low risk sell. Sometimes it fails, right? It just is what it is. But if the market confirms that with a nice dealing range, a nice leg from the low risk buy, low risk sell area, right? Then the retracement within premium and discount there is super high probability. So this is the swing high, this is the swing low. We can see the inefficiency resting in premium. Up close candles here. Up close candles should support price low on the sell side of the curve, right? And there's an inefficiency overlapping this, but more so, take a look at this, guys. I want to bring your attention to this breaker block, right? This breaker was activated through this leg, right? As you can see, this down close candles close below the bodies there, and this really activates the breaker block in my opinion. So I wanted to see the market clear this breaker block first before I take the swing positions, right? There was there was enough evidence in here that this market is actually going to sell off and that my anticipation was correct. Remember, we have an idea, we have a bias, but we need price action to prove that. And that's why we usually trade a response from a certain key level, right? So this inefficiency resting in premium of the dealing range, this up close candles which should support price lower, the breaker block has already been activated. So what logically makes sense to me is the breaker block was activated. This up close candles is just business being done between buyers and sellers. And I've actually done a breakdown to one of my personal friends that I'm trading with. Like, imagine this is the breaker, right? This is the breaker now activated. The market coming back into the breaker is just business being done to, this was the previous area of buyers, right? We know buying takes place in down close candles. So this is a previous area where buying took place. So it's a previous area of accumulation. And now we are simply looking at the market doing business between buyers and sellers. This was previous buyers, and this is now sellers stepping into the market, right? So I do know that the breaker block activated that sequence of events to take place, right? And inside of this key level, I drop down to the lower time frame. Let's just go to the 15-minute chart for a moment, and I'll show you guys the exact executions. So this was me selling this market, and there was a nice second confirmation entry too, and even multiple entries as the days progress. And I'll show you guys another execution that I've taken in this overall narrative, right? So we can see I sold the market here as soon as it traded into 50% of this inefficiency, and then I sold right there. However, the market did manipulate once more above this high, right? And then once again creating a dealing range, right? From the swing high to the swing low, that's a dealing range. This is a fair value gap in premium, or in equilibrium at least. But once again, look at this breaker, guys. That is a tiny breaker, and the market giving us the dealing range closing through the lows of the breaker. This to me is institutional sponsorship. Institutional sponsorship is not only the inefficiency, right? Because why did this inefficiency fail? If this was institutional sponsorship, why did it fail? It failed because obviously it's against the direction. But I mean, we need to close through all highs and all lows to really confirm that change in state of delivery, to confirm the market structure shift. And that to me is when I take a look at institutional sponsorship and know that institutions is present, breaking through all highs and all lows. Nonetheless, the dealing range was created, the breaker was confirmed, and once again, this up close candles is simply the sellers, right? The sellers stepping in right here and doing business with the previous buyers, right? So once again, the breaker block and all that good, it's not even about the pattern. It's more so about what is actually taking place behind the pattern, truly understanding what's taking place in the markets, how previous buyers and new sellers is busy doing business with one another. Nonetheless, there could have been a possible entry right here. There could have been a power of 2 entry right here with stops above the high. Nonetheless, so there you can see the actual execution that I've taken. And then if we fast forward a little bit forward, you can see there was another opportunity that I've taken. There was multiple trades in here, but nonetheless, there was another sell position. I've taken partials here. I've taken partials. And then I've identified that there is a potential second opportunity. So I've sold the market here, and the market is still busy running in that position. So at the end of the day, the market has still a little bit left to reach, and then I will close the final positions for this trade. So thanks guys for watching. I hope that it made sense to you. I hope you are able to fit the pieces together. I would really suggest you guys go and watch the previous video, the before, right, on what the expectation was and what the confirmation was, and now you will have the full picture about it all. But thank you guys for watching. See you guys in the upcoming week, and I'm pretty excited to see you guys there in the live stream. Thank you.